Welcome to Momentum Monday. Today is Sunday, December 1st. Unfortunately, Howard is not going to join us tonight as well. He's still in the hospital. Hopefully, he'll recover and join us next week. So let me share my MarketSmith platform and just go over a few ideas. We're looking at the chart of the Russell 2000, which is the small cap index. Finally, that breakout above 160 that we've been talking about for so long happened. And as of right now, and look, you can see how important that breakout is, because for more than a year, it has been a significant resistance. So from here on, I assume that what was once resistance will most likely become a support. So if by any chance Russell 2000 pulls back towards 160, 160.50, that would probably represent a buying opportunity. And if it drops below its 20-day, which is, let's call it 158.50, I would consider that a kind of failed breakout. The large caps, the S&P, the Nasdaq 100, they're still near all-time highs. They've been up so many weeks in a row that they can use some form of consolidation, either going sideways in a range or just pulling back to their rising 20-day moving average. So last week was a shorter week due to Thanksgiving. I hope you all had a great Thanksgiving and ate a lot of turkey. I think last week, one of the things that made an impression on me was the strength in enterprise software names. Many of those stocks that took a severe beating in September and October are under accumulation now, and many of them are back above their 50-day, 20-day moving average, and are setting up and trying to break out again. Here's Shopify, which had a big breakout from this tight range consolidation last week, and now it's probably consolidating through time. 350 is the next potential level of resistance. MDB, look at this tight range consolidation after that big volume move. So if this stock clears 151, I think it might try to run towards 160. AYX just keeps going higher. What else? The smaller ones too, the cybersecurity name Zscaler, back above its 50-day, and it's now going in a sideways consolidation. I think if it goes above 53, it'll probably try to test its gap near 60. CrowdStrike, 60 is the next important level. I think if it clears it, we can see a move towards 70. Another one, Cloudflare, which is NET, one of those IPOs which timing was a bit unfortunate, and now it's trying to recover. And we saw something similar in Peloton, which got crushed in the first 2-3 weeks of its existence. Went from 25 down to 20. Well, I guess just only down 20%, and now it's back near all-time highs, highly shorted. And in this market, any stock that is highly shorted has become a primary target for a short squeeze. Biotech continues to be the leading sector. Here's IBB, XBI, the other biotech ETF. Both of them and also many biotech stocks are quite extended, so I would not chase them here. Most stocks go up in bull market, they just don't go up at the same time, which means that there is a constant sector rotation going on. So don't chase overextended names. I mean, that of course depends on your time frame. Look at this biotech, Arrowhead. I mean, before last Monday, before that gap, it had already doubled in a couple months. And then it gapped and it went up another 40%. So obviously, you know, buying it here would have been a chase. But if you're a nimble intraday trader, that, you know, it also offers some good opportunities there. Another industry in the healthcare space that is extremely strong is the medical devices. IHI is the medical devices ETF. It is consolidating near all-time highs, and we've seen some quite significant moves in the space. Here's Inspire Medical System. Had a decent move here from 65 to 70. We talked about it last week, and it's now near all-time highs. So I would not chase it here. This stock has a history of being extremely volatile. iSurgical setting up near multi-year highs. Actually, last week it closed at new all-time highs. Short interest not that high, but it's a relatively slow mover. Another one in the space, Massimo Corporation, building the right side of a new base, with 160 being the potential pivot. Here's the weekly perspective. Okay, semiconductors. Last week we talked about a potential bounce, and they did bounce, but that bounce is not very convincing so far. I think if they go below their 20-day, we might see a more significant, deeper pullback towards the rising 50-day moving average. For example, Qualcomm, they were so weak they couldn't even bounce. So I think it's very likely that they test that 50-day here near 81.50, 81, which personally, you know, I think it would be a buying opportunity, at least for a short-term bounce. And some of the other semiconductors, TR, light bounce, and then it had a red day on Friday. So it's really important here that it holds its 50-day moving average, and the rest of the semiconductors are kind of looking similar. Here's NVIDIA, had a big volume breakout, but it's not able to follow through due to the weakness in the sector. Universal Display, something similar, big earnings breakout and sideways consolidation, is just not able to push higher. It's just not ready yet, due to the sector weakness, of course. Last week, another sector that was interesting last week was retail. Of course, typically retailers tend to run in the week before Black Friday, and also some of them continue in December. Here's XRT consolidating near 45. 45 has been an important level for quite some time, and I think if it's cleared, we might see a more significant 45, 45, 50. If that level is cleared, we may see a more significant push in retailers. Here's Lululemon. It's quite extended from most of its major moving averages, so it's probably to consolidate through time. In a best case scenario, Nike. Also, nothing interesting here, just consolidating above its 50-day. JWN is interesting. That's Nordstrom. It had a earnings breakout a couple weeks ago. We had a decent earnings surprise, and ever since it's been trading in a very tight range. So if the retail sector starts rallying, I think this will be one of the retailers to watch and to own for a potential move towards 42, 43. It's not a fast mover, but it's one of those stocks that you can leverage with options when they set up properly. So even a small 5-6% move in the underlying stock can lead to a more significant 100-200% move in the right option. Of course, keep in mind, options are not suitable for everyone. So educate yourself first before you play with them. What else? China. China is a mixed bag. Absolutely a mixed bag. FXI, big gap down on Friday after the Donald Trump signed the document in support of Hong Kong's protesters. So China gap down, FXI, but many of the Chinese internet stocks are holding a lot better than the rest of China. Here's Alibaba. Last week it made I think it was new all-time highs. Let me double check that. No, new 52-week highs. But it's definitely among the strongest Chinese stocks, and it's also the one with the largest market cap, $560 billion. NTES also working on the right side of a new base, also acting very strong after their latest earnings report. JD, which is a Chinese retailer, not as strong. So NTES and NTES and Alibaba are the two Chinese leaders right now to watch. Let's take lastly, let's take a quick look at the Momentum 50 list. This week, number one is ServiceNow. ServiceNow, look at this big volume breakout 2 weeks ago, and then it went sideways for about 1, 2, 3, 4, like 6-7 days sideways tight range action. And on Friday, when most of the general market was down, it was red. Now actually finished solidly green near the highs of its daily range, which tells me that there is a potential for it to try to break out next week and try to run towards 290, 300. What else is interesting on the list? We have RNG, Facebook, Visa, MongoDB, a lot of software. Software is back. Stone, which is a Brazilian payment company. Let's take a quick look at this one. This is also one of it's very highly shorted stock, and this is why we saw this big short squeeze here after they beat earnings. They actually missed on earnings estimates, but they still rallied due to the high short interest and short sellers covering. So it's been going also sideways, consolidating between 40 and 42 after its earnings report. So I think if it clears 42, we might see a push towards 45. 5.6 days to cover. So short interest is pretty significant, and its float is not that small, 270 million. So I would not expect a big move in this one. It's not a small stock either. It's an $11 billion company, but it's an interesting setup. So I think that's all. Thanks for watching. If you have any questions, you can just drop them under the YouTube comments, or you can just always DM me on Twitter. I'm at Ivanhoff2. So it's Ivan HOFF and the number 2. my DM is open, so just send me a question if you have one. And that's it for this week.